Yes, people, a very, very happy about all of you. So, guys, we started with a brand new chapter in the last class. Sir, what brand new chapter? You started CA Foundation Accounts only in last class. So, yes, we started with the CA Foundation Accountancy subject in the last class with chapter number 2, which is called as Accounting Process, wherein we are learning the basics of accounting. Correct? So, in that, we discussed a couple of points. So, let's do a quick recap of that and then we will head forward to the new concept for the day. So, guys, in the last class, I asked yourself a question. What is accounting? So, what is accounting? Sir, accounting in simple language means count. Sir, any transaction which is being happening in the business has to be captured in the books of accounts. Why? To keep a track of those items. In a business, if I'm earning income, I need to keep a track of all my income. In a business, if I'm incurring any expenditure, I need to keep a track of all expenditure. In the business, if I'm buying any assets, I need to keep a track of all the assets. In business, if I have to pay any money to anyone in future, I have to keep a track of to whom all, how much I have to pay. In business, if I'm supposed to collect money from somebody in future or pay some money to somebody in future, I need to keep a track that how much money I have to pay to which all people. So all that we cannot keep in memory. No? Why? Because we hail from Gajani family. Correct? No? We never came from monkeys. We all came from Gajanis. What is the role of Gajani? Forget in regular intervals. So we also have the habit of forgetting in regular intervals. So in that case, what is better thing to do it? Note it down, write it down. So all the transaction that takes place in the business has to be accounted so that we can keep a track of those in the business. And whenever we want, we can go and search those data, and from that data, we can pick and choose those data which is relevant for our discussion purpose. Clear or not clear? No energy.
Yes, sir.
Very good. Next, what is the need for accounting? To be very honest, there are multiple uses for accounting. That is, accounting is being done for multiple purposes. But in that, I'm talking about two primary purposes of doing accounting. One, as a owner, I need to know the performance of my business. Am I doing well or not? So that will be reflected through your trading and P&L account. And second, I want to know the position of my assets and liabilities on a particular date. On a particular date, how much assets do I own? On a particular date, how much money should I be receiving from someone in future? On a particular date, how much money should I be paying to someone in future? So I need to keep a track of all those items. So for that, position of the assets and liabilities is very, very important. So that is the need for accounting. What is the need for accounting rules and regulations? Sir, if the rules and regulations are not in place, each and every accountant will try to present the account or do the accounting in its own sweet way. In such a way that for a given set of question or for a given set of scenario, each one will try to come out with its their own different answers. They'll try to prepare their accounts in their own flavors. So for one given set of questions, you have multiple results. To which result to rely on, that we will not have a clarity. That's what happened in the last class. I give you one question. We came out with 4 to 5 different options. So that is going to happen if the accounting rules and regulations are not in place. So if you have accounting rules and regulations in place, the answer what you present to everyone is going to be uniform. The answer that you're going to present will be understandable. The rules are created in such a way that the data that you present, Sanjay, the data that you present to people should be understandable. If I present any data which is not understandable, then what is the point of presenting that information to me? If you can't present an information to me which is understandable to me, if I give you something in Greek and Latin, there's no format, there's no structure, nothing is there, then what will we understand out of it? Nothing. So in that case, whatever efforts you've put in doing that, what is the purpose of it? There'll be no purpose of it. So make something which is understandable to people. So these rules and regulations will make you understand or teach you how to prepare a financial statement which is understandable by people. Second, the data that you present in the financial statement or the accounting records, you have to ensure that it is transparent. There should not be any hide and seek game. Means in that there should not be anything hidden. Everything should be open and transparent. Correct? If you go to CA.Prathik Academy's Instagram page, what can you see there? Everything is transparent. Feedback of the student, feedback of the parent, individual scores of the students, total scores of the students. Everything is transparent. So with that, any person who comes and visits the Instagram page, what does he find? All the information he finds there. So like that in accounting also, all the data that you're trying to present should be transparent. There should not be any hidden agenda for any accounting done. Next, the data that you're presenting should be reliable. Because on that basis only, I'm making some decision. As an investor, I'm looking at your financial data to decide whether should I invest my money in your company or not. So the data what you're giving to me, on which I am making some decision, should be reliable. The data should be reliable. Next, the data should be comparable. I need to compare my performance of current year with the performance of the previous year. So previous year record and the current year record, the basis of the preparation should be uniform, or else comparability will not be there. Or I can compare my data with the data of the competitors. So his data and my data, if it is supposed to be comparable, then the basis of again preparing should be same. Example means what? I'm preparing the accounts on accrual basis. My competitor is preparing the accounts on cash basis. Means I'm recording income when I'm earning it. He's recording income when he's receiving it. Can I compare both the data? Not possible. So the basis of accounting should be same. Only then comparability is possible. Next, the data that you're trying to present every time should be consistent. Depreciation, if you're charging SLM, every time SLM. One time SLM, one time WDV, one time SLM, one time WDV, it'll be confusing. Like that, in accounts, we use multiple estimate. Multiple formulas we'll use. Every time if you keep on changing the strategy and estimates, then on what basis can I prepare the data? So data should be consistently used while preparing the accounts. So these are the important need for having the accounting rules and regulations in place. Now, the financial statement that you're preparing, the accounting, what you're doing, for whom are you doing all this? Only for the owner? No. Totally, you have to take care of 7 category of people. In that one category is what? Owner. Owner is called as internal user. Whereas all the other people are external user. So owner wants the accounts for multiple reasons. One of his primary reason is what? I want to know profit and loss of my business. So please let me know how am I performing. For that, accounting needs to be done. Like that, he can have multiple reasons for doing accounting. In that, I took only one reason. Then external users also might be requiring the accounting records. Why? Because he wants to make some decision based on that data that you're presenting. So who are those people? Employee. So employee wants to track the growth of the company, because if the company is doing good, then the company will pay the salary to that person. So company will give increment to the person. The company itself is not doing good. If they are struggling, then definitely the growth of the employee they will not take care of. Then on that basis, I can quit this company and go some other company. Second, whether the statutory dues. What example I gave? PF, provident fund, not pension, provident fund, whether the company is paying on time or not to the government account. That account is in whose name? That is the name of the employee, in my name. So in my name, the company is supposed to open an account with the government. So 5,000 rupees, example I gave last class, out of 50,000 rupees, 5,000 rupees the company is supposed to deposit. Did the company deposit money or not? I can check. From where I'll check? In the balance sheet. Which side? Liability side. So on the liability side, PF statutory dues is still pending, means that company is not deposited the money with the government. So I can get that information also. Lender needs to check how the business is performing. Do they have the capacity to repay the loan back or not? So they have to do assessment to give loan or not to give loan. If at all I'm giving loan, how much loan to give? And once I give the loan, does the company have the sufficient cash flows to recover the money from them? If yes, then I'll give. Otherwise, no. Creditor is also interested in a financial statement, because before he gives the goods on credit to you, he wants to assess your situation. He wants to see your past track records. Whether are you making the payment to the creditor on time or not? Or are you making a delayed payment? If you're doing a delayed payment, is that genuine or not? Are you paying the interest as compensation or not? So he also wants to assess something. And then he will decide whether the goods should be given on credit or not. Generally, these creditors are not small creditors. These are creditors with big value. 10 lakh, 20 lakh, 1 crore, 2 crore credit they give. No, that time they'll sit and check all this criteria. Government authority, especially income tax department. Multiple authorities are there. We have one more authority called as MCA, Ministry of Corporate Affairs. He is also interested in your accounting records. Which records? Which is prepared by the company. So like that, government authorities means income tax department, GST department, corporate affairs. All these people are relying on your accounting records for collecting the taxes. So are you presenting the data properly or not? So they are also interested to look into your data. So taxes are collected on the profit that you show. So are you accounting properly? Are you showing the data transparently? Not everything they want to keep a track of. So he's also one of the users of the financial statement. He's also interested in your accounting records. He's also interested in your financial statement. Then public or the potential investor. A new company is there, or already there is an existing company. I want to invest in that company. On what basis will I invest? I will look at the financial statement of the company to check whether the company is fundamentally strong or not. Fundamentally strong means what? I just don't look at the profitability. I will look at the multiple ratios of the company to check whether the company is doing presently well or not, and future also will they do good or not. I will do some kind of assessment. Then I will decide whether should I invest my money in that company or not. So as a potential investor, I'm also interested in that company. Then customers. So all these are the 7 people who are interested in your accounting records, in your financial statement. Any problem, Kana? Everybody's clear? Say loudly, no problem. No energy. One more time, loudly. Very good. Tomorrow I have to extra idlis and come. Correct or no? If you have any problem, you just tell one day before. I have a chef. Wonderful chef. Whatever you say. Anna panilala. Accounting process. Accounting is a systematic process of what? Identifying what? First, identifying whether this is a transaction or not, whether this is event or not. Once you identify transaction event, second thing you have to check whether there is a financial value attached to it or not. And third, whether it is happening in the course of business or not. So identification of the business financial transaction. For this, what is required? Sir, source document is required. Evidence is required. Without this, how will I know? If I purchase this remote, what is the supporting evidence for this? Bill. On that basis, I'll get to know whether this is happening in the course of business or personal life, whether it is happening in the financial transaction or non-financial transaction, whether it is transaction or event itself, I'll get to know when I look at the evidences. So first step is identifying a business financial transaction and event. Can somebody remind me to add an event here? When will you tell? After the class gets over. On the spot, I'll add. But somebody has to remind me. Because we're coming from Gajni background. I'll forget. I don't know about you. I forget. Next, measuring in terms of money means having a monetary value. That is there. That is covered here itself. One more important thing. What does money measurement concept says that? The unit of measurement should be common. Because in business, you will deal with multiple currencies. If I'm dealing with, let's say, other countries, then I will receive payment or make the payment in different currencies. So I cannot put all the currencies together and say this is my total purchase or total income. I need to convert those currencies, foreign currencies, into INR. Once I have everything in INR, then I can add the items together. So having a common unit of measurement is very, very important. Once this is done, you are good to go with the accounting process. You're good to go with the recording process. So recording through journal or subsidiary book. Journal is called as book of original entry, whereas subsidiary book is called as books of original entry. Wonderful. Which means this is the place where you actually start the accounting. Practical aspect of the accounting begins with here. That is what is called as book of original entry. This is the origin. And once you do the entry, you've gone to balance sheet. And in the balance sheet, you found there is a mistake. Can I make the correction on the balance sheet? No. Again, I have to come back and pass a journal entry only for rectifying it. I cannot do any correction any other place. All the correction will be routed or rerouted through journal. Now, how do you record journal? By applying either golden rule or modern rule. So what is the step involved? First is, once you identify a business financial transaction, in that transaction, you have to tell me how many accounts are involved. So how many accounts would be involved? Wonderful. Who said two? Minimum 2. Aspect is 2. Account can be more than 2 also. I introduced cash 1 lakh rupees as capital. Along with that, check I gave for 50,000 rupees. So in this transaction, how many accounts are affected? 3 accounts: cash account, bank account, capital account. So more than 2 accounts will be affected. 2 or more accounts will be affected. And all the accounts put together will have 2 impact. Either debit impact or credit impact, or debit and credit impact, to be very honest. So once you identify business financial transaction, in that identify the accounts involved. Then classify the nature of accounts. On what basis? Either as per golden rule or modern rule. Once you classify it, then apply the rules of debit credit. If you're classifying as per golden rule, let's say this is a real account, then what is the rule says? Debit what comes in, credit what goes out. That you will apply here. Apply the rules of debit credit. Follow the double entry system. Entirely, whenever you're doing journal entry, always ensure that you follow double entry system of accounting. See, today when you're using software like Tally, I'm not bothered here because I cannot complete a journal entry unless and until I post one amount in debit and another amount in credit. So this problem will never come today. This problem used to happen in early days. What happened? People write cash account debit to capital. To capital, they'll not write. They're like, I'll write later. So cash account debit 1,000, they'll record and leave it. Credit aspect, they'll not record. Or Credit aspect they'll record, debit aspect they'll not record. This will mostly happen in the bank ledger. Why? Because when you see in bank statement, 1,000 rupees came. But who paid this 1,000 rupees? You don't know. So what accountant needs to do? Bank account debit 1,000 will debit. He'll go and check with 10 people. Who gave money? Who gave money? By the time he'll get the information, he'll forget that he has to record the transaction of the credit part. He will miss it. So that time they used to follow single entry. Double entry was by mistakenly missed out. Now this problem will not come. So by default, if you're using a software, double entry system is ensured. That is how the software has been designed to. And all the transactions when you record, ensure that you have a supporting evidence to it. No evidence, no recording. Every transaction that you record should be supported with evidence, evidence, evidence. And for this reason, you will always have a fighting with your other department people. Let's suppose you're working in any company. The accounts department is most hated department in any company. Why? Because for certain things, sometimes bill will not be there. For example, at the corner of that road, Bajji Bonda Kada is there. Tea shop is there. You go have Bajji Bonda tea. 50 rupees is spent. If you ask him, Anne, give me 50 rupees bill. Bill. He will tell. So you don't get bill from that fellow. Now you go and tell. That fellow will come and tell you, sir, 50 rupees money spent. I went for client meeting. I was hungry. So I had Bajji Bonda tea. But that fellow did not give me the bill. Now, you as accountant will not pass the bill because there's no bill. You can't give the money to him. So that person will start hating you. Whenever I go to accounts department, donkey fellow, always asking bill. Who will make him understand that for some things bill is not there? Without bill, you will not make the payment. Opposite person can never get the bill. So always you will be in touch with all the other department people. This is practically true. You will also face this once you go into any corporate. You'll be getting clear instruction from your boss. And moreover, in your CA, you itself know that for every transaction, evidences should be there. So for giving this 50 rupees to your employee as tea expenses, I need evidence. No evidence, no payment. No evidence, no payment. If you want payment from me, I'm telling who? Accounts department. If you want payment from me, you produce bill. Donkey fellow, he has to go and identify bill only and give you. That correct? No. Anyways. See, that is not our problem. Where did you go and have? In that roadside shop. You could have go to Girnar Chai and Gup Shop. There it was given. Bill. Sir, that tea 100 rupees, sir. That tunnel, I don't know. Bill you are getting or not? That is important. 50, 100 rupees is not important. Bill is important. Anyways. Once you record through journal and subsidiary book, you classify through ledger. Why are we preparing ledger? Because the format of the journal entry does not help me in totaling. If I want to know total of something, it does not help me in totaling. So again, all the transactions one more time are re-recorded in a place called as ledger. What is a ledger format? Set a T-shaped format. T-shaped format. This is like your mathematics. Gautam, I'm coming. It's like your mathematics. Left hand side is equal to right hand side. Correct? No? Same way, this is left hand side. This is right hand side. And center line is like your equal to. Will you forget this? No. Left hand side is called as debit. Right hand side is called as credit. If any item I record on the debit side, I say the account is debited by so and so amount. If I record any transaction on the credit side, I say the account is credited by so and so amount. Any problem in this? Okay. At the end of the ledger, what happens? You get a total of the ledger. Balance carried down and balance brought down. This total now what will be done? Will be transferred to a place called as trial balance. All the ledger having debit balance, will go to the debit column of the trial balance. And all the ledger having credit balance will go to credit column of trial balance. But please tell me, in a ledger, how will you know that this ledger is having a debit balance or credit balance? How do you know this ledger is having a debit balance or credit balance? Carried down, you look at or brought down? You look at the brought down balance. Now, let's suppose carried down balance is coming here. So where will the brought down balance come? Debit side. Whichever side the brought down balance come, that balance it becomes. So here the brought down balance is coming which side? Debit side. So this balance is what balance? Debit balance item. All the debit balance item will travel where in the balance sheet? Asset side. In balance sheet, there is no debit credit side. In balance sheet, only asset side and liability side. All the ledger having the debit balance will go to asset side of balance sheet. Again, I'll be discussing this in deep when I do a chapter called as ledger with you. I'm just here oral checking because you're coming from accounting background, no? So I'm trying to check your accounting knowledge. Similarly, when I prepare a ledger, carried on balance is coming on debit side, brought on is coming on credit side, brought on is coming on credit side. So what balance does this become? This becomes a credit balance item. This becomes a credit balance item. So this will go to the credit column of trial balance. And from here, it will go to the liability side of balance sheet. If it is liability, it will go to liability side of balance sheet. Any problem? No problem. Now, summarizing will happen through trial balance, profit and loss, and balance sheet. Trial balance, profit and loss, balance sheet. What is this? When I come to the respective chapters, in depth I'll discuss. Now I'll not discuss too much. Once you summarize through trial balance, profit and balance sheet, these two documents, that is profit and loss and balance sheet, put together is called as financial statement. Financial statement is like the report card for the business. Once the financial statement is prepared, is your job over? No. You have to do further job. What is it? So we have to interpret or analyze the financial statement so that we can understand how the company is actually doing. So analysis could be done in multiple ways. One example I give you is accounting ratios. Accounting ratios. Like that, we have multiple tools of financial statement. Fund flow statement, cash flow statement, comparative common size statement, trend analysis, etc., etc., etc. So in the financial management subject, you'll learn about this in depth. Once you interpret and analyze the financial data, you have to communicate the information to the users of the financial statement. Who are those users? Those 7 people. Okay. Right from identifying till classifying. That is up to journal. This process is called as bookkeeping. And from summarizing till communication, this process is called as accounting. Accounting begins where bookkeeping ends. And both of these are done on the basis of the rules and regulations, and that is called as accountancy. Am I teaching something new? We're doing revision of previous class. Okay. Then I also made you understand the meaning of accounting as per American Institute of Certified Public Accountant. Any problem in this? Same data but presented in a different manner. One new addition is what? Accounting is art. All we are artists. Wonderful. Who is the gentleman? Sir, look at it passively. Not look at it passively. As if his friend. Macha, look at it passively. Sir, look at it passively. Okay. Who is he? Artist. Mathematician. He's an Italian mathematician. He's commonly called as father of accounting. So accounting is a branch out of mathematics. Okay. He's the one who has conceptualized the concept of double entry system of accounting. What is double entry system of accounting? He says every transaction will have twofold impacts, twofold aspects, not account. Account can be more than 2. He's telling any transaction can have twofold impacts. In that, one impact will be debit, another impact will be credit. In his language, debit was called as debitor. In his language, credit was called as creditor. Every time using debit or credit is very painful, time-consuming process. So he gave an abbreviation called as DR and CR. We converted debit to debit, creditor to credit. But the abbreviation we written as it is, as a token of respect and love for the gentleman. Am I clear? But in the ICAI model, what they've done, you've seen, no? No. Debito, debita, tota, TT is going on. Anyways, what for us? Very important. Sir, what is the meaning of debit and credit? In simple layman language, what is the meaning of debit and credit? Sir, debit and credit is nothing but plus and minus. Debit is plus, minus. Credit is plus and minus. It is very difficult for our father. Our father means accounting who's our father. Sir, look at it passively. For him, it was very difficult to make people understand this add, this minus. It is very difficult and confusing. So he came out with the concept of debit and credit. So with the name debit and credit, he gave some rules. So he said that this debit credit and the rule what I'm giving, you apply together, automatically that process will take care of what to be added and what to be subtracted. You don't put your mind into it. Like that he said. So that is how this concept was developed. So debit and credit is nothing but plus and minus. Debit is always plus? No. Debit can act as sometime plus and sometime minus. Credit can act sometime plus, sometime minus. The proof of this I'll give today when I do the modern accounting. Modern rule when I discuss. No, that time we'll see when what point I'm saying is right or wrong. Okay. In the ledger, left hand side of the ledger means debit. In the ledger, credit side, oh, this put ulta. Okay, this also you have to remind me. Credit refers to the right side of ledger. Correct? Any information which I record on the debit side, on the debit side of the ledger is called as that account is debited by so and so amount. If I record any information on the credit side of the ledger, I say that so and so amount is credited to that particular account. Any problem? Okay. This also done. Wonderful. Now comes very, very important point. What is that? Golden sparrow. Golden? Oh, okay. I heard golden sparrow. You know what is golden sparrow? மாமா மாமா கமெண்ட் சிங்க யார் அவன் நல்ல பாட்டியா லிரிக்ஸ் பார்க்காதப்பா யூ see my emotion இவ்வளவு நல்லா ஹீரோயின் நல்லா டான்ஸ் பண்ணிருக்காங்க my son 4 years old he knows the entire song by heart தெரியுமா I didn't know that song is existing also. One day is like golden sparrow. Only where I was searching. Golden sparrow phone le. Engada golden sparrow phone le. Golden sparrow song. I went YouTube. Golden sparrow song. I started playing. This fellow. Vamma, Vamma, come and sing. He's singing in the song. Literally 4 years old guy sitting and singing the song. At least 100 times I would have listened. No, I am also a pro in that song. Everything by heart. I have to be very careful with you. Where is our page, man? Last time which we created. This one, you know? Yes. Golden rule is also called as?
Traditional approach.
Very good. Traditional approach. As per golden rule, in a transaction, whatever accounts you are identifying, those accounts can be classified either under personal or impersonal. Under impersonal, real and nominal. So we have 3 classifications: personal, real, nominal. How many classification? 3 classifications. Last one is nominal. Second one is real. First one is personal. Personal account is further bifurcated into
natural, artificial,
natural, artificial, and representative. Natural personal account, artificial personal account, a representative personal account. What does the rule says that? In the business, in the transaction, in the business, if you come across any transaction, in the transaction, if you come across any accounts, which has got a flavor of, income, gain, expense or losses, you have to classify them into nominal accounts. You have to classify them into nominal accounts. You have to classify them under nominal accounts. And what is the rule here? Debit all expense and losses, credit all incomes and gains. Any problem? Then they said that all the assets except bank, debtor, bills receivable, prepaid expenses, accrued income, except these, all the other assets will be classified as real. What is the rule? What is the rule here? Debit what comes in, credit what goes out. Any problem? Okay. Personal account, all the liabilities plus bank, debtor, bills receivable, prepaid expenses, accrued income. All of them will be classifying them under personal account. What is the rule here? So debit the receiver, credit the giver. Wonderful. Any problem here? No problem. Under natural personal account, Natural person account, what classification will come? Sir, any person with whom you're dealing is a human being, then that person is called as a natural personal account. And if the business is dealing with any business entities, financial institutions, these are called as person, but not created by God. It is created by law. Those are called as artificial person, created by law, which is nothing but business enterprise plus financial institutions, etc., whatever name you see. Then comes a representative personal account, means if any account is represented or is being representing a group of people, if any transaction is representing a group of people, then that comes under representative personal account, such as outstanding expenses. I gave example of salary, outstanding salary. March end, I pass an entry for March month salary. What entry? Salary to outstanding salary. This is the salary for almost 1,000 people put together. One single entry, salary entry for 1,000 people put together. So I'm representing how many people? 1,000 people. So this is called as representative personal account. Like that, prepaid expenses, accrued income, unearned income, bills receivable, bills payable. These six are in general representative in nature. How many accounts? Six accounts. Outstanding expenses, prepaid expenses, accrued income, income received in advance. இது நாலுமே ஜோடி. This four is ஜோடி always. Then comes bills receivable and bills payable. Bills receivable and bills payable. All these are in general representative personal account. Bills receivable means what? This is my secure debtor. This is that debtor who has given a promise in writing. Sir, I'll make the payment of so and so amount on so and so date in so and so form. Like that, he signed and gave me. So that became a secure debtor. So under bills receivable, who and all is signing and giving like that, all of them I'm recording under bills receivable, which means under bills receivable I can have multiple people. Hence it is group of people that is being represented. Hence it is representative personal account. In case of debtor, it is not the case, because in case of debtor, we record the entry in the individual debtor's name, either in the business name. So if I'm selling goods to Reliance Limited, so Reliance Limited account debit to sales. If I'm selling goods to Ram account debit to sales. So debtor you generally create in the individual name. Bills receivable is not for individual person. It is for a group of secured debtors. That is why debtor is going to either natural or artificial, whereas bills receivable is coming under representative personal account. The logic is clear or not clear? No energy. Logic is clear or not clear? Wonderful. Till this we discussed last class? Till this we discussed last class? Okay, wonderful. Now, can you do some questions based on this? My mind like golden span தான் போயிட்டு இருக்கு. One example was there. Traditional approach. This example, which is on page number 2.17. Anybody who does not have the book? Okay, doesn't have the book means you didn't receive the book from ICAI itself. You place the order. Anybody who did not place the order, right? 2 days before only SRO number came. Okay. So I'll put a poll after the class gets over. Multiple poll. Who applied, who didn't apply? Who got CDS portal link, who didn't get CDS portal link? Who applied book, who didn't apply book? Who received book, who didn't receive the book? Sit and fulfill all the poll. By this month end, everybody can ensure that you have the books in hand. Until then, I'll be sending the soft copy in the group. Okay? Okay. Now, example, from the following information, state the nature of account and state which account will be debited and which account will be credited. From the following information, state the nature of account and state which account will be debited and which will be credited. Rule is not mentioned. So as of now, which rule? Let's go with golden rule. started business with a capital of 50 lakh rupees. My question goes to all of you. Is this a transaction or event? Come from the accounting process. Accounting is a systematic process of identifying business, financial transaction, event. Transaction or event? So this is a transaction which happens between two people. In that one person is business, another person is owner. Always owner and the business are two different people. Who says this? Accounting entry concept, business entry concept says that owner and business both are separate. So here the transaction is between owner and business. Transaction, not even transaction. Is this having any monetary value, financial value into it? Yes. Is it happening in the course of business? Yes. So first two conditions satisfied. Third condition, record. Measuring in terms of money over. Identifying business financial transaction, measuring in terms of money over, because this is in INR. Third point, recording. For recording, what is the step to be done? Identify the accounts involved. In this transaction, how many accounts are involved? Sir, one, I have to keep a track of the capital, because whenever the business is closing in future, I have to pay the money back to the owner. So I need to keep that in mind. I have to keep that amount in track. Second, this capital I received in form of cash. So how much money I received, how much cash is there in my hand or bank, I need to keep a track of it. So one is capital account, second is cash or bank account. So how many accounts, people? Two accounts. So now capital, cash. So first step was what? Identifying the accounts involved. Done. What is next step? Classify the nature as per now golden rule. So capital as per golden rule, which account? Personal, real, nominee. Personal? No. Personal. Personal, real or nominal? Donkey fellows, all the liabilities come under personal. Capital also is liability, no? So it is personal. I'll not stop here. Which personal? Natural. Natural. Yes. Yes. Who gave this money? The owner gave the money. Who's created by God? So this is natural personal account. Natural personal account. Okay. Cash. Think and tell. All assets are real except bank debtors, bills receivable, prepaid expense, accrued income. So cash means real account. Had they told this money came in form of bank, then bank is your personal account. Which person? Artificial person account. Am I clear? Okay. Now we're going with cash first. I think they're going with cash only. No bank. Oh my God. No cash. We'll go with bank itself. Generally, nothing mentioned means in foundation it is bank. Like that, I will tell you how to believe. So bank is what? Artificial personal account. Wonderful. Rule is what? Debit the receiver, credit the giver. Debit the receiver, credit the giver. Who's the receiver? Who's the giver? Bank is receiving. Bank is receiver of the money. Who's the giver? This. Bank is a receiver. Capital is the owner, is the giver. So what is the whom should I debit now? Bank I should debit. Capital I should credit. Is it matching or not matching? Any difficulty? Just observe. Just apply your mind. Okay. Journal entry I'm not doing now because I'm meant to teach. Sir, what you will teach, sir? We know, sir. 11, 12, we are a pro, sir. Okay. How many of you feel that you are a pro in journal entry? How many of you feel that you're a pro in journal entry? Anybody? Nobody's pro, huh? She knew it. She's like, if we raise our hands, I know you'll ask question. So better we don't respond. Okay. Escaped. Wages, salary paid 50,000. Wages, salary paid 50,000. Is it a BFT or BFE? It's a business financial transaction, because this is a transaction happening between the company and the person who's giving the employee service. Okay. Amount is in INR. So money measurement principle also taken care of. Now recording. What is the first step involved? Identify the accounts. How many accounts? Two accounts. One is wages, salary, and since it is paid in form of bank. Now what have they done? Bank only. Wonderful. So how many accounts involved? Sir, wages and salaries. Second is bank. Wages and salary, personal, real, nominal. Nominal. Loudly say nominal. Very good. Bank. Artificial personal account. Okay. Rule for nominal account. General rule for nominal account. Debit all expense and losses, credit all income and gain. Wages and salaries, expense, income, gain, loss. It is expenditure. It is expenditure. Hence, what I should do? Debit. Bank, debit the receiver, credit the giver. So when you are making the payment to the staff, on your instruction, banker is giving the money to the staff. So credit the giver. So banker is giver here. Credit the giver. Any problem? Answer matching, not matching. Oh, you're cross-checking my answer. Huh? Whether sir is doing properly, you're cross-checking the answer also. Oh. You're checking the book. Wow. Like that, you should be always praising me. Next, rent received rupees 2 lakh. How many accounts are affected? Sir, rent only seen here, sir. Only one account is affected, sir. If you record only one account and come, are you following double entry system? No. What are you following? Single entry system. Single entry system, is it right? Is it reliable? No. So rent received. Received where? In the bank account. Nothing mentioned means in the bank account. So how many accounts affected? Rent received account. Second is bank account. Rent account received is in nature of income. All the income will come under nominal account. So this is income. What is the rule? Debit all expense and losses, create all income and gain. Create all income and gain. Bank, artificial personal account. When you're receiving the rent, on your behalf, who is receiving, collecting the money? Banker is collecting. So banker is the receiver of your money. So debit the receiver. Debit the receiver. Any problem?
No, sir.
Perfect. Matching. Bank, debit receiver, rent, credit, income. Am I going fast or this speed is fine? Or is it too slow? Who's saying slow? Purchase goods on credit 9 lakh rupees. Purchase goods on credit 9 lakh rupees. How many accounts will I open? 2 accounts. Only 2. Which 2? Purchase.
Purchase
Why do I need
account
purchase?
and creditors account.
Why do I need purchase? Sir, I need to record expense. Expense is good for the business because it helps to reduce your income. If income is less, profit less. Profit less means taxes less. Correct? No? Okay. Second, sir, goods account, sir. Goods account, sir. You will never open any goods account. You'll open goods account when? At the end of the year by passing a adjustment entry for closing stock. That time it will come. While buying the goods, selling the goods, you will never open goods entry. Goods account. Then nothing is left, sir. Donkey fellow, nothing is left. But you know that these goods are purchased on credit. What is the meaning of credit transaction? Credit transaction means
Creditor.
what? Sir, we are enjoying the product now, but we'll pay later. Credit transaction means what? I'm buying the goods on credit, I'll pay later. Or I'm selling the goods now and receive the money later. Means credit transaction means the goods and services are exchanged now. Whereas the money from them will come to us or we will give money in future. Which means goods and services are exchanged at one date. Money is exchanged on some other date. That is called as credit transaction. What is cash transaction? The goods and services and the money both are exchanged together at the same time. It is called as cash transaction. Any problem? So this is credit transaction. Goods purchased on credit means I'm buying the goods now, I'll make the payment later. Like that, in business, I'm purchasing goods from 100 different people. If I don't record it, I will forget. I will forget to whom all I have to pay because I have 100 people to pay. To whom all I have to pay, I'll forget. Second, to which person what amount to pay, I will not remember because I am Gajani. I am Gajani. When I'm saying Gajani, I'm Gajani. You are also Gajani only. Don't be happy that I'm Gajani means Pratik sir is Gajani. You also forget. So now to remember what I should do, record it. Which side? Asset side or liability side? Liability side. Liability side of the balance sheet always reminds you that so much money to so and so person I have to pay in future. So what is liability? Anything that I have to pay to someone, anything that I have to pay to someone in future is liability. What is asset? Anything that I own in the business, anything which I own it, land, building, plant, machinery, my asset. To remember, assets I'll record. So anything that I own in the business is asset, or anything that I'm expecting to receive in future. Anything I have to receive in future is asset. Anything that I have to pay in future is liability. Anything that I have to receive from future is asset. So here I have to pay in future. So it is liability. Liability always will have what balance? Always credit balance. Any problem? So here what is the name of the liability holder? Creditor. Technically they should give the name. Ram, Sham, Ghansham, something they have to give. Nothing they give. Which means you will classify them as creditor. So two accounts involved. One is purchase account. Second is creditor account. Purchase what classification? Personal, real, nominal? Nominal. Expense or income? Expense. Debit or credit? Debit. Creditor? Liability. Which account? Personal. Which personal? No, if it's a human being, then natural. If it's non-human being, it is artificial. They have not given information, I don't know. So it's a personal account. Debit the receiver, credit the giver. Debit the receiver. At this point of time, in this transaction, what is being exchanged? Goods is being exchanged. So we will be either receiver or giver of the goods. So here creditor is the giver of the goods. He is giving the goods to us. So always personal account is from whose point of view? Opposite person's point of view. Receiver and giver always from the opposite person's point of view. Please understand. Whenever I say debit the receiver, here we will not see whether I am receiving or I am giving. Receiver and giver means always opposite party. Here always opposite party. From the opposite point of view. Here in our example, we purchase the goods on credit. So I am the receiver of the goods. He is the giver of the goods. So from whose point of view recorded now? You are saying creditor. You are saying creditor. So creditor's point of view, he is a receiver or giver? He is a giver. He is a giver. So credit the giver. Credit the giver. Any problem in this? Whereas your real and nominal account is from whose point of view? From the business point of view. Debit what comes in? Inside where? Inside business. Credit what goes out? Outside where? Outside the business it is going. Debit all expense and losses. Expenses and losses of whom? Business. Credit all income and gain of whom? Business. So real account and nominal account from whose point of view? Business point of view. Whereas personal account, whose point of view? Always opposite person's point of view. Will you forget this point? Very, very important point. If you want, I'll write this point now itself. Because I don't trust you guys also. Gajini fellow you are. You'll also forget at the end. What is the other correction? Event. Event, where are you? Here is. Okay. Sir, allocating, sir. Thank you. That's all, huh? What to do? What to do in debit credit? Ah, very good. I said no, I'm Gajini Phil. I'll forget. Where is Pan? Very good. That's all? All corrections done? Okay. Next, sold goods for 8,16,000 and received payment in check. Cash transaction or credit transaction? I mean, when I say cash transaction, it doesn't mean that I'm referring to cash account. See, there are two types of transaction. One is credit transaction. Second is cash transaction. When I say cash transaction, it means what? Goods, services and money both are exchanged in same time. So here cash refers to only a way of saying cash. This includes cash exchange, bank exchange or exchange in any other form. In short, when the goods and services are met with the payment receipt immediately, means payment receipt and the goods services are exchanged immediately, we refer that commonly as cash transaction. When I say cash transaction, don't take purely at heart cash itself. Cash transaction includes bank payments also. Credit transaction means what? Goods and services are exchanged now. Money is exchanged in future. Okay. So what type of transaction this is? Cash transaction, but the payment is happening through check. The mode of payment is check. Check means the money will get reduced in the bank account. So which account affected? Sir, sale account, sir. Why? Because I need to record my income. I need to record my income. So sale account will come into picture. Goods account will never open. And we have never something called as check account. We have something called as bank account. Sale is what? Nominal account. Nominal classification. Why it is? Income. Rule. Debit all expense and losses. Credit all income and gain. Bank. Artificial personal account. Debit the receiver, credit the giver. Receiver or giver? Always from whose point of view? Opposite person's point of view. So bank is receiver or giver? Receiver. Debit the receiver. You are different and bank is different. Do you agree? My money is with HDFC Bank. I am different. HDFC Bank is different. In HDFC Bank, the account what I have is in my name. But who's holding that money? In my bank account, who's holding the money? Banker is holding the money. So he's the opposite person. Logic is clear or not clear? No energy. I'm going. Bye. I'm going. I'm going home. Bye. I'm going. See, I've turned my chair. I'll sit like this only now. If I don't get the answer, I'll walk away. After 5 minutes, I'll come back again also. Because if I say I'm going, you will say happily go, sir. We will sit and chill. Illustration 4. Analyze transaction of Mrs. Okay. M/S stands for what? Missa. Spelling? M-I-S-S. M-I-S or M-I-S-S? Miss. Okay. Others, boys, you all agree with this? Everybody? But you had 11th and 12th, boss. At so many places, M/S was there in textbook. No. Was there or not? Was there? No. What did your teacher say? MS stands for Miss. Donkey fellow. That is not Miss. That is MESSERS. Messers. All the business enterprise are referred by name Messers. M/S. Miss. Now, analyze the transaction of Messrs. Sahil and Co. for the month of March 2022 on the basis of double entry system by adopting following approach. In that we are doing now traditional approach. Transaction in the month of March 22 were as follows and all the figures are in thousands. Okay. Sahil is the owner because look at the name Sahil and Co. means he is the owner. Sahil introduced capital through bank. How many accounts are affected? Are you sure? Are you sure? See, I will try to confuse you. You have to be very clear. How many accounts? How many accounts? 2 accounts. One is Sahil's capital account. Second is bank account. Wonderful. Sahil's capital, what classification? Personal. Okay. Which personal? Natural person because Sahil is created by God. So now he is natural personal account. Natural personal account. Always personal account. From whose point of view to see? Opposite person. Now Sahil and business both are different. I should not see from the business point of view. Opposite person. Sahil's point of view. Is he the receiver of the money or giver of the money? He is the giver of the money. Okay. Bank. Okay, before the rule. Debit the receiver, credit the giver. Credit the giver. So Sahil's account will be credited. Bank. Artificial personal account. Again from opposite person point of view. Bank is receiving money or giving money? On behalf of the company or on behalf of the business, bank is receiving the money. So debit the receiver. So he's the receiver. Debit the receiver. So bank account debit to Sahil's capital. Any problem? Sir, we are discussing all this, okay. We are not writing anything in textbook. So are we not supposed to write it? You are supposed to write it. But when? After going home. After going home, again you will do this entire question as homework. Easy one, no? So I'm trying to put the concept in your head. Wherever I say, do it along with me, that time you'll do it. Now you will observe it. So whatever example I discussed, whatever illustration I discussed, that is so far homework for you. Now we're doing a warm-up, so you're just observing. Sometime observing will have a good retention in the mind. Then once you go back home, same question do one more time with a proper format. You get a super flow. Next, cash withdrawn from Citibank. Cash withdrawn from Citibank rupees 200. How many accounts affected? Two account affected. Sir, cash withdrawn means what? In my hand, cash is going up. My cash balance in hand is going to increase. So I have to record that. I have to capture the data. Second, the money is withdrawn from the bank. So bank balance is going to go down. So two places are going to get impacted. One is cash account, second is bank account. So let's talk about cash first. What classification? So all assets are real except those items. In that exception, does cash come? No. So cash is your real account. What is the rule? Debit what comes in, credit what goes out. So cash is coming in or going out? Sir, when I withdraw the money from the bank, cash is coming inside the business. So debit what comes in? Money is coming in and hence debit. Next, bank. What classification? Artificial personal account. Bank is giver of the money or receiver of the money? He is giving the money. Receiver, who's that? Giver of the money. Bank is giving the money to us. He's the giver. He's the giver. Credit the giver. Correct? No? So one debit, another credit. We are following double entry system of accounting where every transaction has got threefold impact, sir. Twofold impact. One is debit impact, second is credit impact. Any problem? Any problem? Open your mouth and so. Any problem? No problem. Okay. Next, loan of rupees 500 taken from Mr. Y. Transaction or event? Transaction. Yes, sir. Okay. How many accounts are involved? Think and tell. Which account? So loan taken. Cash or bank? Nothing mentioned means bank. What have they taken? Bank only, man. Why? Nothing mentioned means bank. So money is coming in the bank. Bank. Okay. Another account. Why do you want to write Mr. Wise loan? Creditor. Creditor. What is the meaning of creditor? The person from whom I'm buying the goods on credit is called as a creditor. The person who's giving the loan is called as a lender. So lender is different, creditor is different. Creditor will come only in the context of from whom I'm buying the goods on credit. Am I clear at this point? Sometimes I buy the asset on credit. That person is called as vendor, not creditor. Creditor only for goods purchased on credit. Asset purchased on credit is either supplier or vendor. Am I clear? Okay. But why Mr. Y's account I have to remember, boss? Sir, you are Gajni fellow. You'll forget. What will I forget? Sir, you have taken loan, sir. Loan means what? Not your income. You can enjoy only for short-term period. In future, one day you have to repay him back. No. So anything that I have to repay in future is liability. I need to record the data in my records. So I need to remember to pay this money to Y in future. So I need to open which account? Y's loan account. This will remind me that I have to pay money to Y. Which side of the financial statement or which part of the financial statement this data will be seated? Liability, balance sheet. In balance sheet, which side? Liability side. So another account is Y's loan account. Any problem? Now, bank, artificial personal account, receiver or giver? Sir, we are taking money from Y. Y is giving the money to our banker. Debit the receiver. So he's a receiver. So debit. Y is loan account. What classification? Personal, real, nominal. All liabilities are personal account. Which personal here? Y is natural personal account. He's a natural person. So natural personal account. Always personal account. Whose point of view? Opposite person's point of view. Is he the receiver or giver? He's a giver. He's the giver. So credit to the giver. Any problem? Online people, any problem?
No, sir.
Wonderful.
No, sir.
Salary is paid for the month of March 22, 300 and 100 is still payable for the month of March. Salary is paid for the month of March 22, 300 paid and 200 is still payable in the month of March. First of all, transaction or event? Again, transaction. Are you sure? You should say very sure. If you are very confident, you should say very sure. Okay. How many accounts are affected? Three accounts are affected. Sir, you just now said, sir, in any transaction, only two accounts are affected. Two aspects are affected. Account can be two or more. Wonderful. Tell me how many accounts? Three accounts. Name. Salary. Outstanding salary. Money is paid through bank. Wonderful. You already know accounts. Then why do you want to learn accounts? That will go sit in foundation exam. No? Salary. Nominal. Because it is expenditure. Online people, good morning. Debit or credit? Debit.
Good
Debit all
afternoon.
expense and losses. Outstanding salary, what classification? Personal. Which personal? Representative personal account. All of you by hearted? Yes, sir. Who's that? Representative personal account. Debit the receiver, credit the giver. Receiver or giver?
Receiver.
Opposite person's point of view. You guys decide and tell me. I'll wait. Somebody's telling receiver. After so much of teaching, also confusing. Now you have to sit and study from. You can't go to foundation exam directly. Now the confidence is lost. Tell me,
Receiver.
outstanding salary. Opposite person point of view. Receiver or giver. These are those group of people who are receiving the money. Receiver. Receiver. Oh my God. How am I giver? Giver, what is the opposite person giving to you? My question is, bank, let's talk about bank made the payment of 300. Bank is what? Giver of the money. Bank is giving something. Outstanding salary, a group of people that is being represented, what are they giving to you? You are the giver, no boss. Now tell me. Golden rule is a failure at this place. How will you justify, boss? You tell me. You're telling this is giver. That's what you said, no. What are you giving? Explain me. In all the above cases, we agreed. If Sahil is giving capital, cash. So Sahil create giver. Okay. Cash withdrawn from the bank. So bank is giving money to us. Bank is the giver. Bank is giver of the money. Here, what are you giving, boss? Tell me. I'm waiting since 15 years for this answer. Tell me, pa. You didn't ask your question to ma'am, school teacher? No? Why? For me, this doesn't work here. But if this question comes in exam, you have to write and come. What I have to think this is a liability. All the liabilities will have credit balance, and hence I have to give a credit. So in the artificial personal account, sorry, representative personal account, when will you credit? Only if it is a giver. Huh? Credit the giver. Credit the giver. So giver I'll record. But what is he giving? He's receiving only money from us, no?
Sir, you told to think in third person's point.
Exactly.
We are receiving, the employee will be receiving the salary, sir. So definitely receive.
What is the answer? You said correct only. But what is the answer? Giver credit. That's what I'm asking. Why? ஏன் என்னோட ஆன்சர் என்கிட்ட சொல்லிட்டு சார் இதானே சார் நானும் அதானே சொல்றேன். Now, anyways, so for me, I'm more comfortable here with the modern rule. What is modern rule? We'll discuss. Anyways, so here it is giver credit. How did I decide? Outstanding salary means what? This is the money that I have to pay in future. Anything that I have to pay in future is liability. Liability is what balance? Credit balance. And to create liability, credit. Hence, giver. Because in the personal account, always when will you credit? If it is giver, you will credit. So that is how I derived giver. So through the modern rule, I came back to golden rule. I'll be able to follow. In exam, same thing you have to do if you're getting confused. Bank is giver. Bank is giver. Debit the receiver, credit the giver. So these both are credit and this is debit. So what is the entry? Salary account, debit to outstanding salary to bank. How much is your total salary expenses? 400. How much is outstanding? 100. How much is paid? 300. Out of 400, 300 paid, 100 yet to be paid. Journal entry I have not taught you. Whatever you have learned, based on that I have taught you, or just based on that I am doing this journal entry. Okay, wow. I have not taught the journal entry yet. Any problem in this? All comfortable so far? Okay. Now, furniture purchased 500. Entry, please. Or not entry. Accounts, please. Furniture account, purchase account. Purchase account? Sir, purchase is there, no, sir. How many of you felt that purchase account should be captured? Honestly, raise your hands. Honestly. So, purchase account will come into picture. Like, how many of you thought? Honestly, raise your hands. Nobody? Oh, pro, no. Purchase account will never be opened unless I'm buying the furniture with the intention to sell. I'm buying the furniture. If I'm buying something with the intention to resell or sell, in that case, I will record that product in the purchase account. Now, here the question is silent. Nowhere they told that Sahil is into business of furniture. He's not into business of buying and selling furniture. So it is very obvious that he's buying the furniture with the intent to use it. So anything that I use is my asset. Anything that I use is my asset. If I'm getting benefit for more than one financial year, if the benefit is exhausted in the same year, it is my expenditure. Sir, you said something, nothing registered here. Forget it, no problem. When I come to capital expenditure, revenue expenditure, deferred revenue expenditure, in depth I'll discuss. Here I just wanted to say something to see what is a facial reaction. 50% processed people, remaining 50% people on their face there's a question mark. With that I understood that I have to explain this point in deep when the right time comes. Okay, that time I'll talk about it. Now, my discussion is restricted only to this transaction. Again, I'm repeating. To record anything in your purchase account, the goods I should buy with the intention to sell or resell. That will only be qualifying under purchase account. If I'm buying anything with the intention to use it, then goes to your asset account. There's a disclaimer. When I come to capital expenditure, revenue expenditure, deferred revenue expenditure, at that time I'll explain what is that disclaimer. As of now, anything that you consume or use is not asset. It also could be expenditure. How, when will be discussed when I'm doing the capital expenditure and revenue expenditure. There's a separate unit in your chapter number 1, which will be discussed at the end. So purchase account, I'm not bringing into picture. Furniture account, because this is a separate asset. I need to make a list of all my assets. Second, I paid the money for buying the furniture. So furniture account and bank account are affected. Do you have any problem in digesting this point? Had the question told you, I'm buying the furniture with the intention to sell, that time furniture account will not come. Purchase account will come. Because purchase is my expenditure. Now, furniture, what classification? Real account. All the assets are real except those. What is the rule? Debit what comes in, credit what goes out. So this is coming in or going out. So if I keep on buying more and more furniture comes inside the business. So debit what comes in, debit what comes in. Bank, artificial personal account. And the money is going out. Money is going out. So banker is giver of the money. Banker is giver of the money. Debit the receiver, credit the giver. Any problem? Any problem? No, sir. Okay. There's one mistake which has happened in this book, rectified. Under real account, accounts which relate to assets of the firm but not debt, that is except liability, are real accounts. For example, accounts regarding land, building, investment, fixed deposit are all real account. Cash in hand also is real account. And what have they said? Cash at bank is also real. Is it right? Cash at bank, your bank balance is your artificial personal account. So this is a mistake here. Please rectify it. Please rectify it. Those who have the textbook. Others, when you get the textbook, please check with your friends that what changes we've made. Accordingly, you can implement those changes also.
So page number?
This will confuse. This is on page number 2.16. 2.16.
Okay.
I could have discussed this in the beginning itself, but that time you will not trust. Sir, you know more than book. That's why I made you do all the question. In all the question, what did I say? Do banks get classified as artificial personal account? Hence the proof. Okay. All of you have studied partnership in a 12th standard? All of you have studied partnership in 12th standard? Okay. There's a topic called as goodwill. Who pays goodwill to whom? Let's take an example. ABC, D. ABC old partner, D new partner. So I can call this as old partner, new partner, sacrificing partner, gaining partner. Okay. So please tell me who pays to whom? Tell me in this context. Don't tell me that.
So
Tell me in this
partner to
context. Who pays
partner.
the money to whom? Gaining partner pays money to sacrificing partner, is what few people are saying. Other people who are silent, I want your answer. Who pays goodwill to whom? என்ன but 12th முடிச்சு வந்திருக்கீங்க? 12th completed, no? So result didn't come, sir. Only after result comes, we'll get to know pass or fail. Yes, Gautam.
So partner to partner and
Partner to partner, even I know, man.
sir,
Which partner to which partner?
gaining to sacrificing
He
partner.
is Gautam is playing very safe. Oh, if I say gaining, sacrificing, I'll get stuck. पैसा मैं partner to partner सुनना, sir decide पढ़ता हूँ. Sir itself will decide. You take who you want to take, gaining or sacrificing. You decide. My question is very specific and to the point. Who is paying goodwill to whom? Krish. Gaining partner is paying to sacrificing partner. Gaining partner is paying to sacrificing partner. Why? Because the gaining partner is going to get the share of profit from these people. So when this person is giving profit to D, he cannot get it free of cost. No, he has to pay something in return. So to buy the profits of ABC, he is paying goodwill. So gaining partner has to pay goodwill to sacrificing partner. This I'll be discussing in depth next week when I do goodwill topic in 12th CBS. You are telling gaining partner is going to give goodwill to sacrificing partner. So who's the giver? Who's the receiver? And do you agree that all these four people are natural personal account? Natural personal account. What is the rule of personal account? Receiver, giver. Debit the receiver, credit the giver. Okay, no? Debit the receiver, credit the giver. This is what you are saying. I am not saying. You are saying. Correct? Okay. Journal entry for this. What is actual journal entry that you studied in 12th standard? Gaining
Goodwill.
partner's capital account debit to sacrificing partner. Not just in the context of the admission. You take in retirement, death, any case you take. Always the gaining partner has to pay money to sacrificing partner. So whenever the cash is not coming into picture, that is goodwill is to be adjusted through capital account. If the cash is not coming inside, the entry is what? Gaining partner to sacrificing partner. This is the entry. Gaining partner of debited. In personal account, when should you debit? Receiver. When should you credit? Giver. Who's the receiver? Who's the receiver? Sacrificing partner. In the receiver column, whom you have put? Gaining partner. What is this cooperation? Tell me. Why didn't you ask this question in a school? Ma'am, here golden rule is not getting applied properly. Tell me properly what is the rule. Why didn't you ask? Tell me. My question is clear. You said that sacrificing partner is receiver and he should be debited. Instead of debiting sacrificing partner, you have debited gaining partner. You said that gaining partner is giver of the money. He should be credited. But whom have you credited here? Sacrificing partner. Opposite you have done. Where is the application of golden rule? Boss. Golden rule application. Ever done. So golden rule is a failure. I gave how many examples so far since last class? 3 examples. Last class I gave an example. What is that? Goods withdrawn by the owner for the personal purpose. I gave example of chocolate. I withdrew the chocolate from business for personal purpose. Drawings to purchase. Purchase you credited. Is it your income? No. But rule says what? Credit all income and gain. Second example I gave you today. Outstanding expenses, outstanding salary. Again, they are also failed. Now this is the third example where the golden rule is again a failure. Like that multiple times in the entire foundation, in the entire inter. Until you're 100% convinced, I'll keep on repeating the point. Golden rule is not 100% right. I'm not saying the rule itself is wrong. See, those days the rule was applicable. In today's scenario, it is not applicable. Accounts has evolved many folds. So as the rule needs to be expanded. That's why they expanded the rule and they brought a new rule called as modern rule. Modern rule is coming out of what? Golden rule only. The base of modern rule is what? Golden rule only. Golden rule at multiple places could not be made practically applicable. And hence there is a need to bring in modern rule into picture. Sir, what does the modern rule says? What does modern rule says? Like how we have two names for golden rule. I mean, golden rule is one name, another is traditional approach. Like that, for modern rule also we have three names. One is modern rule, second is American approach, third is accounting equation approach. This rule says that in a transaction, once you identify the accounts, any accounts, you will be able to classify them under either asset, liability capital, revenue, and expenses. One more time. Any transaction that you come across, any transaction, we did so many examples today. How many transactions we did? In that, we recorded so many accounts. Here, modern rule says that any account that comes into picture can be classified either as asset or liability capital or revenue or expenses. Am I clear? Let's take one example. We did one question now, no? Illustration 4. You say the last question, furniture purchase for 500. In this, which two accounts are affected? Furniture account was affected and bank account was affected. Please tell me, furniture is what classification? Furniture is what classification? Asset classification. Okay. Next was what? Bank. Bank is what classification? Liability, amma. Bank also is asset because the money which is there in the bank, I own it. Whenever I ask, the bank will give the money. So what is the meaning of asset? Anything that I own or anything that I expect to receive in future is asset. The money which is there in the bank is my money. I own it. Or this money, whenever I ask, the banker is supposed to give me in the future. So anything that I own or anything that I'm supposed to receive in future is my asset. So bank and furniture both are asset. Do you agree with me? Okay. Previous question. Three accounts affected. Tell me. Salary account, outstanding salary account, and bank account. As per modern rule, salary is what classification? Salary is expense classification. Salary is expense classification. Outstanding salary, what classification? Said is a liability because this much money I have to pay to the employee in the future. So what classification? Liability classification. Bank, asset classification. Loan taken from Mr. Y. Loan taken from Mr. Y. You said two account. One is bank account. Second is loan by Y account. Loan by Y account. Bank is what classification? Asset. Loan by Y. Liability. Because I have to pay the money back to Y in future. Anything that I have to pay in future is liability. You take any transaction, any account, you will be comfortably be able to classify them either as asset or liability capital or revenue or expenses. Liability capital both are separate. But why I put together is because the rule for both of them is same. Am I loud and clear? So how many classifications? Totally 5 classification. 1, 2, 3, 4, 5. Now your textbook is given 6 classification. Book starting on this. Oh, this first book. Sorry. That's what I was wondering what is coming. Modern classification. Asset, liability, capital, revenue, expenditure. They have something called as withdrawn account. Not required. Withdrawn means what? Drawing account. Drawing is a part of your capital only. When I contribute capital, capital increases. When I withdraw capital, capital decreases. So I can do in the capital account itself. So how many classification technically? 5 classification. Any problem in this? So are you clear with the type of classification? How many classification? Loudly, open your mouth and loudly. How many classifications? 5 classification. First classification, asset, liability, capital, revenue, expenses. Wonderful. Second question that you have to ask yourself is, so what is the type or nature of balance? What is the nature of balance? Assets will always have debit balance. Assets will always have debit balance. Liability and capital always have credit balance. Now, this is a rule that we have agreed. The rule is that if asset is debit, liability should be credit. That is the rule we have agreed. If you want, you can call asset as credit balance and liability as debit balance. You can call asset as credit balance, liability as debit balance. Still, your balance sheet will tally. But your presentation will be different from other people's presentation. Will I be able to compare? So to ensure comparability, the format needs to be uniform. The only condition is that asset and liability should be opposite to each other. Like how in mathematics, this is left hand side and this is right hand side. Both are opposite. Like that, asset is always opposite to liability. Asset is always opposite to liability. You can choose any side you want to choose. Still your balance sheet will tally. So if you want to record asset on the left hand side and liabilities on the right hand side, you can do it. Nobody is going to stop you. Normal format is what? Normal format is that left hand side liabilities, right hand side asset. Will your balance sheet say, if I put asset here and liability here, will your balance sheet say, no, I will not tally myself? Will your balance sheet say, no, you change the position, so I will not tally myself? Will it say? No, still it will tally. So here, if asset is coming on the left hand side, you're putting in credit balance, in liability, debit balance. I can do it. But will it be comparable? No. So accounting rules that you have to follow should be in a way that the data what you present and the other people present should be comparable. And hence we agreed uniformly, we agreed unanimously that we'll always debit assets. So assets carry what balance? Always debit balance, debit balance, debit balance. We have agreed. We agreed the format. And if asset is debit, liability always be opposite of that, which is credit. Any problem in this? Online people, any problem in this?
No, sir.
Everybody, please open your mouth and respond.
No, sir.
Everybody,
No.
everybody.
No, sir.
Now, asset liability balance clear. Revenue is credit balance. This is derived from a golden rule. What does the golden rule says? Nominal account. Debit all expense and losses. Credit all income and gain. Credit all income and gain. So by that virtue, this becomes what balance? Credit balance. Debit all expense and losses. Debit all expense and losses. What balance it is? Debit balance. Any problem? Okay. My question goes to all of you. In modern rule, how many classification? 5 classification.
5.
First one. Loudly. Asset. Next. Liability. Then capital. Then revenue or gain. Technically, rain is not rain. Revenue is right now. Then expense bar loss. So how many classification? 5 classification. Asset what balance? Debit balance. Liability what balance? Credit balance. Revenue? Credit balance. Expenses? Debit balance. Will you forget this? No. Now, next, we have to see the rule of debit and credit. How do I debit? How do I credit? In a transaction, let's take an example. Sahil introduced rupees 10,000 capital in cash. How many accounts affected? 2 accounts, Sahil's capital and cash. Please tell me, capital is what classification? Capital is capital classification only. Cash is what classification? Asset classification. So please tell me, if Sahil keeps on giving money in form of capital, my liability in the business, my capital in the business will increase or decrease? It will keep on increasing. If Sahil keeps on giving cash to the business, cash balance in the business will keep on increasing or decreasing? More capital, more cash. More capital, more cash. So asset will also increase. So here, the rule of debit credit is dependent on increase of the balance and decrease of the balance. If balances of the asset increase, to increase the asset balance, if asset balance increases, I need to debit. Because who is the hero for asset? Who is the hero for asset? Asset is debit balance. So who will be the hero? Debit is the hero. So to increase a debit balance item, should I debit or credit? Debit. Asset is what balance? Debit balance. To increase asset, debit. If I say debit is a plus item, to increase the plus item, I should give further plus or minus? Plus. When I say asset is a debit balance, means I'm telling asset is a plus balance. To increase the plus item, I have to give further plus. To decrease the plus item, minus. So debit and credit is nothing but plus and minus. அப்போவே சொன்னேன், you didn't believe me. Asset is what balance? Debit balance. Plus and minus what balance? Plus balance. To increase, plus debit. To decrease, minus. Liability and capital, what balance? Credit balance. Again, what balance? Plus balance. So you only said no, so debit credit should be opposite. Now you're confusing us. That confusion only even look at it passively had. Sorry. Sir, look at it passively had. Sir, look at it passively also same confusion. If I tell this is also plus, that is also plus, poor people get confused. So he gave the name debit and credit. Now why I'm telling plus? Because liability and capital credit balance. Plus balance. To increase, add the plus balance, add to give further plus. To increase the liability, to increase the capital. Increase means what? Add, no. Add means what? Plus, no. To increase an item, add, plus. To decrease, minus. So what is debit credit? Nothing but plus and minus. But why the name is given? Because debit will act sometime plus, sometime minus. Credit will act sometime plus, sometime minus. So both I said what? Plus balance, plus balance. Now you got confused. Plus and minus, so now how much confusion it creates. That is why they gave the name called as debit and credit. The plus name is there, no. They wrapped up with the wrapper called as debit. Plus wrapped up with the wrapper called as credit. Minus wrapped up with the wrapper called as credit and debit. Any problem? So debit and credit with the rule what they've given, if you follow, automatically the rule will tell you what to add and what to minus. You don't have to consciously apply your mind to it. That is the beauty of the modern rule. Not modern rule. That is the beauty of Sir look at it passively. He created double entry system for accounting. He created everything. Modern rule is coming out of his rule only, no? That's why we call him as father of accounting. He has taken care of everything for us. We just have to follow what he's saying. Any problem? No energy. I'm going. Bye. Who said yes? Now, revenue is what balance? Credit balance. Credit balance means plus balance. To increase more revenue, to add more revenue, credit. Because hero is what? Credit card, CR plus. To increase revenue, credit. To decrease revenue, debit. Any problem? Expense is what balance? Debit balance. To increase debit balance item, debit. Debit will increase further debit. Debit will increase further debit. Debiting will increase the debit balance. Debit will decrease the, sorry, crediting will decrease the debit balance. So to increase expenses, debit. To decrease expenses, credit. Those who are studying this for the very first time, you will take at least a week of time to get used to it. But once you become used to this, no, very easy rule. At so many places you can apply without any hesitation. That's my challenge. Any problem? Any problem? Okay. How many classification? 5 classification. Name please. Asset, liability, capital, revenue, expenses. Revenue includes gain. Expense includes losses. Asset what balance? Debit balance. Liability? Credit balance. Revenue? Credit balance. Expenses? Debit balance. Any problem? If I want to increase the asset, debit. To decrease the asset, credit. In debit balance, to increase debit. To decrease credit. Debit means plus. Credit means minus. In this case, credit balance, if I want to increase the liability, add credit. Decrease the liability, minus means debit. In this case, to increase plus, it is credit. Revenue credit balance. If I want to increase my income, add income, what should I do? Credit. To decrease income, debit. Expenses, what balance? Debit balance. To increase expense, debit. To decrease expense, credit. Any problem? Question 6. show the classification of the following accounts under traditional and accounting equation approach. Accounting equation approach? Sir, only taught modern rule. So didn't even say accounting equation approach. Sir, cheated. Wrong fellow. What is another name for modern rule? Accounting equation approach. Another name? American approach. Anything they can ask. See, I'll tell you, we Indians have some serious problem. We cannot satisfy with one name. How many of you have multiple names for your own self? Nickname, nickname. Properly raise your hands. 1, 2, 3, 4. Only 4 people. Others what? 5, 6. Others what they call? Seni ko Seni bolte hain. Gautam. Gautam, what is a Gauti? What is a nickname, Gautam? Boomer.
The Lakshmi.
Boomer. Boomer. That you kept or parents kept? Parents cannot keep boomer. Correct, no? Like that, my son has got not one name, 10 names. Each one will try to call their own name. Each one. Anita itself has kept 4 names for him. Except Ayan, she'll call every other name. Trust me, I'm telling you. Like that, we are obsessed with multiple names. Modern rule, one rule you gave, no. What is another name? Accounting equation approach. That also not satisfied. American approach. Like that, multiple places, I will prove that we are Indian obsessed with multiple type of names we want. We don't satisfy with one single name. We want multiple names to it. Will you forget this? No. Now, what are they asking people? They're telling you to classify. As per traditional, how many classification? 3 classification. Personal, real, nominal. As per accounting equation, 5 classification. Any problem? Are you all ready? Yes. Can I shoot the question? Yes. Okay. Now, building what classification? No, we'll go with accounting equation first. We're doing accounting equation. No? We'll do modern rule first. Building. Asset. Purchases.
Sir, according to gold
modern rule. Only modern rule now.
Sir, according
Asset.
no,
लॉक कर दिया जाए. कौन है फ्रेंड? நான் வந்து I'm that Surya, no? Who hosted? நீங்களும் மெல்லலாம் ஒரு கொடி. Surya. I'm Surya. In Hindi, कौन बनेगा करोड़पति? I'm Amitabh Bachchan. I'm the host asking the question. And you are asking, sir, purchase only, no, sir? The person who is hosting the game, will he ever give the answer? Tell me, Gana. But she'll say, sir, but I gave fees to you, no, sir. So you have to answer, no, sir. Think and tell me. Okay, what are the classifications for modern rule?
Sir, assets, liability or capital, revenue or gain, expenses or costs.
Okay. Is purchase asset?
No, sir.
No. Is purchase liability capital?
No, sir.
Is purchase revenue?
No, sir.
No. Are you sure?
Yes, sir.
Then what is purchase?
Expenses only.
Expenses only. You say confidently, sir, purchase is expenses. The more I buy the goods in the business, more expenditure. So purchases is expenditure. Very good. Sales. Revenue. Bank fixed deposit. That's it. Rent. Expenses. Rent outstanding. Sir, I feel like telling artificial representative personal account, but you're asking modern rule, no, sir. Rent outstanding. Okay. What is the meaning of rent outstanding? Of asset? Liability. What is the meaning of rent outstanding? Expense incurred, money not paid. I took the services from the landlord. Landlord gave me this premises. I used the entire premises for 1 month, but I did not pay the money. Why? Because I'll pay the money next month. So at the month end, this money is outstanding. No, means what? I'm yet to pay. So rent outstanding. Outstanding means what? Yet to. And outstanding is a term that we normally refer to the context of the expenditure. So yet to pay expenditure means what? Liability. When will I pay? In future. Anything that I pay in future is liability. Outstanding expenses, prepaid expenses, accrued income, unearned income. Next class or next to next class. Each and every concept I'll be discussing individually. So that time I'll explain properly. Now here my purpose is what? To classify the accounts. As of now, understand rent outstanding means what? This rent I'm yet to pay. This rent I'm yet to pay. Yet to pay means what? Not yet paid. When will you pay? In future. Anything that I pay in future is liability. So what classification? Liability classification. Even now, if you're making any mistake, I'm okay with it because you're in the process of learning. Once you become a pro like me, that time you can't make a mistake. So rent outstanding is liability. Now, now the question is, sir, E point is rent. How did you say this is expenditure? How do you know this is not income? So listen to me very carefully. There's a thumb rule that we agreed. Again, I'll repeat. Whenever any word is given, rent, interest, commission, paid, received, not given. Paid means what? Expense. Received means what? Income. Nothing given. Rent income, rent expense. Interest income, interest expense. That also is not given. That is whether it is income or expense, nothing is given. So how will I know whether this is income or expense? If nothing mentioned, always we assume that it is expenditure. This is a standard rule that we agreed. Whenever they give the word rent, interest, commission, etc., and they don't tell whether this is income nature or expense nature, always by default it is expense in nature. Are you able to follow? Now in trial balance, sometime what will happen? They'll put in two columns, either in debit column or credit column. Now let's suppose they put rent in the credit column. Then what happens? Now nothing they've told. Rent paid, received, expense, income, nothing mentioned. What will you assume? What will you assume? Will you assume expense here? No, because it is given in what column? Credit column. Credit column means what? It is income. Income is what balance? Credit balance. So it goes to your income side. So you have to look at three information. To decide whether this is income or expense, you have to look at how many information? Three information. What are those three information? Either they should have told you this rent is received or paid. They should tell you this information. Or they should tell you this is expenditure or income. Or they should have given you this in the debit column or credit column. If these three information are given, based on this three information, you can decide whether it is income or expense. I am telling you, when none of these information are available, in that case, is rent become your expenditure. Any problem? No problem. This point can I include in the data? You'll forget, no? You want in the summary notes? This is the summary note which I'm going to give a printout in future for reference purpose. So do you want me to include this point in the summary note? Because you'll forget, I know. People are not showing any excitement. If you don't want, I'll leave it. I'll need to draft and give. This is for my rough purpose. I've noted down because I'll forget. If you're Gajni, I'm Gajni ka baap in forgetting things. Now, so far, 6 points you have done. In this, do you have any doubts? No energy. No. Online people, so far 6 points I've discussed. In this, do you have any doubts?
No, sir.
No, sir.
No, sir.
Again, I'm telling you, outstanding expenses, prepaid expenses, accrued income, unearned income. These 4 cases in depth I'll discuss. Each case at least for half an hour I'll discuss. So 2 hours only on those 4 points. Now, cash, asset, adjusted purchase. Like how purchase is expense, adjusted purchase also is expense. But there's a difference between purchase and adjusted purchase. When the right time comes, I'll discuss. Though this is covered already in 11th standard, both in state board and in CBSE, we have a concept called as adjusted purchase method. What is that? I'll be discussing separately when the right time comes. As of now, adjusted purchase also is expenditure. Closing inventory. Closing inventory. Always asset. Always asset, because this is the inventory that goes to your balance sheet. Now, Varun said that this is reversal of expenditure. You are true, because another aspect of the closing stock entry is what? Reversal of expenditure. But here, this is an item. Others, whatever I'm saying, you'll not understand. Because I meant to discuss this concept with you. I'm just giving the answer to those people, those who have already done 11th and 12th with me. Why this closing inventory is not reversal of expense? Because what is the journal entry for closing stock? Closing stock account debit to trading account. Trading account is the reversal of expense. Closing stock is my asset. Here they've asked closing stock is account name. Then what is it? Asset. This goes to balance sheet. That is why this is not reversal of expense. Others, don't get confused. This point I meant to discuss with you. So what Varun asked, to understand that, I have to discuss some important point. That time I'll tell you what I said now. Clear this point. So as of now, just remember, closing stock is what? Asset. Closing inventory. This is a stock that I own at the end of the year. This is a stock that I own at the end of the year. Anything that I own in the business is asset. Why this is not reversal of expenditure, I'll discuss when the right time comes. Whatever is there here, everything I'll pour it out. Don't panic. Everything I'll share with you. Investment. Investment. Asset. Because I've put my money in the fixed deposit. Whenever I want, I can get that money back in future. So anything that I get in future is asset. I put money in share market. Investment or not investment? Investment. I put money in share market. I put in mutual funds. Investment. Whenever I want, I can get the money back. So anything that I get back in future is asset. So investment is asset. Next, trade receivable. Trade receivable is a sum total of debtor plus bills receivable. Debtor is unsecured. Bills receivable is secured. Both of them put together is called as receivables. Trade receivable means the receivable which is happening in the normal course of my business. What is my normal course of business? Sir, I'm buying this product and selling this product. So I'm into business of buying and selling speaker. This is my regular business. This is my regular trade. In the trade, in the business, the money which I'm meant to receive is called as receivables. This should come from my debtor. This should come from my bills receivable. So both of them put together are called as trade receivables. Debtor, all of you know. Bills receivable, you don't know. I'll explain what is bills receivable when I do a topic called as bills of exchange. Any problem? Any problem? Next, sales. Sales. Sale is my revenue. Oh, sorry. Sales tax payable. Sales tax payable. You know what? There's no concept of sales tax payable now. After GST came into picture, we have something called a GST payable, but nothing called as sales tax payable. But is there? We have to do it. What is it? Sales tax payable. Payable. Payable means what? I'm yet to pay. I'm yet to pay. Payable. It is payable. When will I pay? In future. Anything that I pay in future is liability. What did I say? Didn't I say it? Now what happened? In the answer they changed. In textbook they did not change. So what will you do? Ding 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 ding. Ding 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 ding. GST payable. I said or not? Sales tax is abolished after GST came into picture. 3 class from now. That is 3 class later we'll discuss a concept called as GST. 2 to 3 classes will go only in GST. That time I'll discuss this concept. We have sums based on that, very much applicable to your level. High chance of question coming from GST topic. Discount allowed. Expense or loss? Expense. There's a difference between expense and loss.
Loss.
Discount allowed. It is a loss. Which discount are we talking about? Cash discount or trade discount? Cash discount or trade discount? Sir, first, what is cash? What is trade discount? Now, all this is covered where in 11 CBC. So tell me one thing. Touch your heart and tell me. 2 years you studied properly 11th and 12th CBC or 11th-12th matriculation. Which means studying 11th you took one entire year. Studying 12th you took one entire year. Correct, no? And you are expecting me to teach everything from basics in foundation. And how many months you've given to me to complete the syllabus? 6 to 7 months maximum. In the 6 to 7 months, whatever you studied in 11th or whatever you didn't study in 11th properly, in 12th properly, everything you have to cover. Plus advanced concept of the same chapter. Plus new chapters. All together 6 months. Poor fellow. Where will I go? How can I cover everything in one? Now you understood why I made you undergo the 11th and 12th CBC classes. Because there's so many things where we have a luxury time in 11th and 12th to discuss. All the points to repeat here. Will I have time? I can teach, no problem. But you can't give January attempt. You have to give next January attempt only for that. Which you are not ready. Now tell me. Watching 11th and 12th CBSE classes is advisable, not advisable? Partnership. We are going to spend in 12th CBSE 110 hours. How many hours? Only 110 hours for one chapter. That too only 12 CBC level. After that, you will come to foundation. New concepts are there in partnership where I'll spend 30 hours. So 110 plus 30 is how much? 140 hours only for partnership. Because you're going to get a question for 15 to 20 marks from that. Important or not important? Now, are you trying to tell me, sir, we will not do 12 CBC with you? Partnership, 30 hours, what you're going to take? In that, everything will manage. How will you manage? Where is 140 hours? Where is 140 hours and where is 30 hours? In partnership, we are doing fundamentals for last 1 month. You agree with me? We started last month, March mid. Till now, fundamentals, one chapter alone is going. How much is there? Did I even repeat any one point in that class? Every class we had a new concept. Though I have the habit of revising things, but did I discuss the same concept again and again every class? No. The concepts are continuously different, which means 16 classes we have spent in the partnership fundamentals so far. Every classes we studied something new. Every class is something new we studied. Which means we're going to take 4 months to do partnership topic in 12 CBC. Do you think we'll have 4 months of time to do partnership in foundation also? So what do everybody do in other places? They'll rush up like anything. Nothing people understand. Everybody skip the partnership topic for the exam. Everybody will skip the partnership topic. In other places, those who are coming from CBSE school, no. Had they studied properly in the CBSE school, no. That time they'll manage partnership in the foundation. Metric people, everybody leaves the partnership in choice and only goes. I'm talking about the other academy, other foundation students. Invariably, everybody. So how do you know? Because I have students coming from different academies. So I asked them, have Kujali, did you study partnership properly or not? Because in 30 hours, I know you'll not study anything properly. The only agenda behind giving you the extra classes is that I don't want a single person to skip any single chapter. Partnership, though it is not relevant in inter, but it is applicable in your articleship. When you practically start working for a audit firm, when you come across a partnership accounts, that time you should be able to handle it properly. That is the whole effort of teaching you so much in extra. The knowledge you should possess so strong. Goodwill topic. Where do you study goodwill? In partnership, no. If that is not known properly, how will you understand the goodwill topic coming in the big other concepts, other places? P&L appropriation account term, where do we learn? In the partnership. In depth, we learn. The same thing is there in C Inter now. When I'm doing company accounts, there's something called as P&L appropriation. There can I sit and teach what is appropriation account? Because in Inter, to teach Inter itself is so big, so huge topic. So your basics, what you're learning now, you have to make it very strong. Have people who come from different places to our academy for Inter now. Foundation cleared, basics still not, there's no hold. Still basics not hold. They don't have any hold on it. What is the point by clearing the foundation that way? By that way, if you clear CA also, what will happen? Tomorrow, if anybody in the market asks the questions, if you're not able to answer, what will he say? Dong, if you cleared CA, doesn't know this also. Yes or no? This is my one favorite question I asked everybody. My favorite question. Entire Coimbatore knows by now. My same question goes to all of you. You open the trading account. Sales, where do you record? Buy sales. Closing stock, where do you record? Buy closing stock. Opening stock, where do you record? 2 opening stock. Purchases, where do you record? 2 purchases. Format every bit by heart? Super, sir. My question is, why do you record closing stock in the trading account credit side? Why do you record closing stock in the trading account credit side? Both of you tell me. Asset na balance sheet le ponalla. Second, what is the nature of closing stock that is coming in trading account? You said closing stock is asset. Wrong. Closing stock which is coming in balance sheet is asset. This closing stock is not asset. You understood now? Like that, in the entire 11th and 12th standard, what you've studied, either you come from CBSE background or metric background. Anybody who's not studied 11th and 12th from me, 100% on your face, I'll tell you, you don't know the concepts. Because I know nobody teaches concept. To teach concept, it is a pain. As a teacher, we have to put a lot of effort. Today, who wants to put so much of effort? Everybody wants to do easy way of learning, easy way of earning. That's all. To teach, you need to have heart. You need to have intention. Who has got intention today? That I want to teach so nicely that this person, when he goes in the market outside, will have a great life out of that learning. Like that, who thinks? Nobody thinks. Actually speaking, I can cut short so many things that I've said. I can teach only what is relevant for your exam. With that, I'm 100% telling I'll make you pass. But by that virtue, if you pass also, what is the point? When there is no knowledge here, what is the point? The entire purpose of you spending so much of time, the entire purpose of you spending so much of money is what? To gain something which you can apply in your practical life and earn money out of it, earn respect out of it. Money you're earning, because after CA, anyways, you'll get a package of 8 lakh, 10 lakh, 12 lakh, and all. But what is the name that you're earning? When your boss is asking a simple question, if you're not able to answer that, what is the point of that CA degree? Which is giving you money, but not giving you respect. So, knowledge will give you respect. Degree will give you money. Knowledge will give you respect. We need respect also, money also. Both. We will not compromise on one also. Both we need. For knowledge, we cannot compromise the earning. For earning, we cannot compromise the knowledge. Both are 100% essential. I am very clear with that point. That's why I do only one batch in a year. I can do multiple batches. You came and asked me, sir, September batch, can we do it? More than you, I'll be profitable. Tell me why. After September batch, immediately I can start May batch. In year 2 batches, I can do. And if I do September batch, no, I'm telling you, I'll get 40 admissions more extra. I can get 40 people more extra. Who is earning more? I'm earning more. But why I'm not taking? Because I cannot teach you properly in the span of 3 months. In a span of 3 months, I cannot teach you properly. Maybe I can help you with passing. Just pass maybe. But I cannot help you get a good score. And where I'm maintaining this good result, 60% result, which I'm maintaining, or 50% result, that I cannot maintain if I keep the September attempt. If I keep the September attempt in view, out of you, hardly 2-3 people I can make you clear. Others again repeat in Jan. What is the point? So by giving only one batch in a year, I'm the person who is suffering at the end. Because extra classes, extra energy, extra time, extra money. Money what I'm able to earn from another batch, that I'm losing the opportunity. All this for whom? For you. So that you can pass. And when you pass, at the end, what do I get? Name. When people come and tell me on Kalpavriksha Academy, people are maintaining 50-60% result. That name is what I'm craving for. More than name, nothing is there. Money is there, okay. Will come and go. Name once gone, you can never get it back. And by the time you get back, it's very, very difficult to get a good name. And maintaining that name is even more difficult. Because once you get a name, there's a head weight coming, attitude coming in. That attitude will be the reason for our downfall. So it is very important when you grow in your life, also you have to be grounded to the earth. Correct? Ravanan. He's a man with his penance, how much of power he got, how much of knowledge he's got. Despite that, he had to get killed by Lord Rama because of his arrogance and ego. His arrogance and ego, he did not channelize positively. He channelized it negatively for negative purposes. So a man with such a huge power, huge knowledge, if you go and look at the history of Ravanan, you will get to know how gem of a person he was earlier, before all this drama happened. But at the end of the day, everything he lost to his ego and arrogance. So even tomorrow you become CA, you become a big businessman, you make crores of money. If you're not grounded, if you're showing your attitude to people, God will start showing attitude towards you. Nothing is permanent. You think that I want money. You think that I want the CA degree. No. It is because of your hard work, your good karmas, you got this degree. So you try to show attitude to God, God will take nothing. I mean, all the things away from you in no seconds. So always you have to be very humble people. Try to help how much of people as possible. Don't try to be selfish. So this looks like more sort of a philosophy class. Let's come back. Discount allowed. It is a loss. So maybe next class or next to next class, I'll give you an idea on what is cash discount, what is trade discount, why this is loss. By that explanation, you'll get a better picture. So as of now, just digest my point. Discount allowed is a loss. For example, you go to Brookfield Lifestyle. You shop for 10,000 rupees. You shop for 10,000 rupees. He tells you there's a discount of 1,000 rupees. You have to pay only 9,000. So this money is losing. This money, what is not going to get is a loss. So this is discount allowed. But technically, this is not discount. Because when I say discount allowed, I'm talking about cash discount allowed. This discount, what I'm telling is trade discount. Now, what is the difference between both? I should properly explain. That time only you'll understand. All I'm trying to put a concept in your mind is that when somebody allows a discount, that is the money that they're not going to receive. That is the money that they're not going to receive. If I give you a discount, means that much money I will not receive from you, which is my loss. Which is my loss. So technically keep in mind, discount allowed is a loss. Now what is cash discount? Why is trade discount? Whether this discount allowed is cash discount allowed or trade discount allowed, I'll discuss in the upcoming class. Am I loud and clear? Here my discussion will be very short. Here my discussion is going to be very short, guys. Like 11 CBSE, I cannot give in-depth discussion. My discussion is going to be limited, restricted. Bad debt, what is it? Bad debt is a loss. Wonderful. Bad debt is a loss. Which will come under which category? Expense category. See, loss is correct word, but loss is coming under which classification? Only expense classification. Likewise, discount allowed is a loss, but what classification? Expense classification. Capital classification. Drawings, capital classification. In bracket, they put drawings. What have they put there in the form? Withdrawal. Have they put withdrawal here? Ask why. Go and ask why. That's why I said there's only 5 classification. Drawing also belongs to capital family only. So capital classification only. Sir, you're a pro, sir. Now, interest receivable account. Interest receivable, not yet received. When will I receive? In future. Anything that I receive in future is asset. Will you forget this? Rent received in advance. This is a liability. Oh my God. So we thought asset was that. Now I said you outstanding expenses, prepaid expenses, accrued income, unearned income. Unearned income means what? Income received in advance is called as unearned income. That I will be discussing in the upcoming class. As of now, just take it what I'm saying. This is a liability. Why this is a liability? When I explain that concept, it will be understandable. Prepaid salary account. Prepaid salary. Prepaid. Asset. Why asset? You'll understand in the next class. Prepaid is asset. Bad debt recovered account. Bad debt recovered. Earlier there's a bad debt. The debtor did not pay the money. I recorded that is a bad debt loss. 2-3 years later, out of guilt, he's coming giving me this money back. So I've recovered my bad debt. Bad debt recovered gain. What classification? Revenue classification. Depreciation, expenditure. What is the meaning of depreciation? Why depreciation? I'll discuss in the depreciation chapter. Depreciation is expenses. Personal income tax. Drawings. Why drawings? Personal income tax. Why drawings? Now listen to me very carefully. In case of a sole proprietorship business, all of you know this term called as PAN. PAN. PAN, all of you heard this? What is it called as?
Permanent account number.
Who said personal? Permanent. Sorry for the spelling. Permanent account number. Stands for permanent account number. Permanent account number. This is basically a unique identification number. Why? Because in India, Pratik, how many Pratik will be there? N number of Pratik. Now Aadhaar is there. Aadhaar came recently only. PAN is there for so many years. PAN was created by the income tax department so that I can identify the person individually. Individually, I need to identify, okay, this is Bhuvan. This is Abhinaya. Like that, I have to identify them separately. Abhinaya can be multiple Abhinaya in the entire India. In our class, we have 2 Abhinaya. One more? Yes, 2 Abhinaya. So how will my income tax department, how will my software know which Abhinaya I should call for assessment? So they gave a unique identification number called as PAN. Now, sole proprietorship business will be having a PAN, which is the PAN number of the owner himself, So which means if this owner is filing his income tax return, he has to file under this PAN only. So whether the owner is earning the personal income or whether the owner is earning the business income, all the taxes on all the income will be recorded under only one common PAN as PAN of the owner. Whereas in case of partnership business, PAN for the partnership firm will be separate and PAN number for the partners will be separate. So partners' personal income will be recorded in the PAN of the partner. That is, income tax returns has to be submitted separately by the partner in his personal PAN number. And firm will submit the business income tax return under the firm's PAN number. So firm has got a different PAN number, partners have a different PAN number. Similarly, if I take about company will be given a separate PAN number, and the directors or the promoters, whatever you say, they have a separate PAN number. But that is not the case in case of sole proprietorship business. Do you agree with me? Are you able to follow? Guys, in a partnership business and company, for the business, there's a separate PAN number. And for owner, there's a separate PAN number. Owner's personal income is filed with the owner's PAN number. Business income is filed under business PAN number. But in case of sole proprietorship business, the PAN number is common for both. So owner's personal income and business ka income is record everything in a one common PAN. Therefore, the tax what is paid is totally common tax of both business and the personal income of the owner. So in case CA.Prathik Academy, KVA, is a sole proprietorship concern, the PAN what KVA has and the PAN what I have both are same. So when I submit the income tax return, I will have the profit coming from KVA. Plus I will have my personal income. All put together is my total income. Total income. On the total income, I'll have total tax. So tax is on the entire income put together. Do you agree with me? Are you able to follow? Now, you will study in CA Inter. There's a subject called as income tax. In your income tax, you learn that whatever income you earn, you can classify them under 5 heads. There are how many heads of income? 5 heads of income. First head is salary. Income from salary. Income from salary. Second is house property. This is one separate classification, house property. So if any money that I earn from salary, I will record under salary head. Any income that I earn by renting out my property, that is coming under house property. Third is PGBP, profits and gains from business and profession. Profits and gains from business and profession. So here what profit comes? Profit of the business. Profit of the business comes under what head? PGBP category. Fourth category is capital gain. If I sell a property, 1 crore ka land I purchased, sold it for 1.5 crore. So how much profit? 50 lakh profit. That is called as profit on capital gain. That is capital gain profits. So that will come under this category. And finally is other sources. Anything which does not fit in the 4 sources will come in the 5th head. Anything which does not fit in the first 4 head will go to your 5th head. For example, I go to casino, earn 1 lakh rupees in Goa. That is my other income, other sources. If I put a fixed deposit in bank, if I get interest income, go to other sources. Am I clear? So in that, please tell me, if I go to some other academy as an employee and work, if they give me salary, where will I record it? Salary. So I'm working in one institution, let's suppose, and I'm getting salary, let's suppose. Also, I have a property which I've lent it out. So I'll have rental income also? Yes. I have KVA business, CA.Prathik Academy also. I'm running my own academy. From there, profit also is coming. Current year, I sold a land. I got a capital gain. Plus, I have some interest income from the fixed deposit. Okay. All of them put together, 10 lakh rupees. Income tax rate is, let's suppose, for convenience, 10%. 1 lakh rupees I have to pay as income tax. Now, please tell me, can you sit and segregate the tax? That so much is tax for this. We can segregate, but we don't do this. So, law says that whatever tax amount you paid, in case you paid that 1 lakh rupees tax on your personal income, all these are my income. This is all Prathik's income. On this, whatever tax you pay, you will be treated this as personal expenditure. You will treat this as personal. So anything that is personal will be routed through the drawings account. Are you able to follow? When a sole proprietorship business, that is the owner of the sole business, pays the tax, he pays the tax on the 5 heads of income. In that one head is what? Profits from business. I am unable to segregate this separately, and hence I cannot treat this as business expenditure. Whatever money this I pay from the business, if I pay any money, this personal tax from the business, I will call this as Drawings. Always in case of a sole proprietorship business, whatever tax he pays, whatever income tax he pays, from the business point of view, it is drawings, drawings, drawings. Second reason, Income Tax Act does not allow you to claim tax as your expenditure. In other words, in the business, if I'm doing a sale of, let's say, 1 crore rupee, if I incur an expense, let's say purchase expense of 50 lakh rupees, I'm allowed to minus. I'm allowed to record this purchase as expenses. I'm allowed to record this expense as my purchase expense as my claim. I can claim my expense in the business because it helps me in reducing my income, thereby helping me to reduce my taxes. If I do any expenses in the business, if I do any business expense, that expense also I can claim as expenditure. Let's say another 30 lakhs. So what is my profit? 20 lakh is profit. So we are allowed by Income Tax Act to claim these expenses as my expenses of the business. Income Tax Act does not allow you to claim the tax paid as expenses. Tax paid by the business is never allowed as expenditure. It is disallowed. The tax expenses of the business is not allowed as expenditure. Therefore, I'm not putting under the expenditure category. So all those who thought that personal income tax or income tax of the business is my expenditure, it is not expenditure. Even if the word personal income tax is not there, sole proprietorship business income tax, still it is drawings only. Because the tax of a sole proprietorship business is not just the business income. In that we have the other incomes also. Salary, house property, capital gain and other sources. So therefore, this is a tax on the all the incomes, personal income, business income, everything put together. An Income Tax Act does not allow us to segregate. Hence, whatever tax paid from the business for income tax purposes will be classified as drawings, drawings, drawings. Any problem? Will you forget this point? Here, luckily they use the word personal income tax. So it is personal means what? Drawings, you know. But even if they use the word income tax for the business, still it is drawings only. Am I loud and clear? Any problem? This is only in case of sole proprietorship business. In partnership business, tax paid by the firm on the business profit. That is your appropriation. That is your appropriation. But if the partner is paying his personal tax from the firm's money, that is nothing but personal income tax paid drawings. Company pays tax on the company's profit. So the tax paid from the profit of the company is called as appropriation of profit, not expenditure. What is appropriation? We discussed in the partnership topic. There's a difference between expense and appropriation. Expenses charged against profit, I said you. Expenses charged against profit. Appropriation means what? Distribution. So in company, in partnership, whatever tax you pay from the profit of the business, it is your appropriation and not expenses. Am I loud and clear? Yes. But if any director, if any promoter uses the company's money to pay his personal income tax, that will become his drawing. That will be the drawings of that particular promoter. Purida? Any doubts? Easy or difficult? Very easy. Okay. Classification done as per modern rule. Any problem? Now same classification as per traditional rule. With that, we'll wind up. Please tell me. Building. Personal, real or nominal? Very good. Online people, please open your mouth and say building, personal, real, nominal.
Real.
Real account. Purchases.
Real.
Nominal. Sales. Nominal. Bank fixed deposit. All assets are real except
Real.
bank,
Bank,
debtor, bills
accrued
receivable, bills, prepaid expense, accrued income. Bank fixed deposit. Tell. Fixed deposit. Always fixed deposit. Real it is. Those who said real, my question to you, fixed deposit is there where? Bank. Bank is what? Artificial personal account. How it is real? Current account balance, savings account balance, fixed deposit balance. Where it is there, boss? Bank. So my question is, The question that we did earlier, whenever the word bank came, you said artificial person. Bank there meant what? You said bank is artificial person. What in bank is artificial person? The bank balance. In bank, what balance is there? Current account balance, savings account balance, 50 balance. All these are what? Balances, no. There, where? In bank. That is why bank is artificial personal account. Correct only, no? Logic is correct, no? So when I say fixed deposit is there. Where? In bank. So bank is the receiver of money. Bank is the giver of money. Fixed deposit, when I deposit, I am giving money to the banker. So banker is receiving the money. Banker is receiving the money. Debit the receiver. So fixed deposit, bank, current account balance, savings account balance, all these are personal account. Rent. Rent is nominal. Rent outstanding. Representative personal account. Cash, real account.
Real.
Adjusted purchase, nominal account.
Nominal.
Closing inventory. Asset, which classification? Real account. Investments, investment
Real.
asset, real account. Trade receivable, trade receivable.
Real.
What is trade receivable? Debtor and bills receivable. All assets are real except bank bills receivable. Bank bills receivable. Both of them put together is what? Trade receivable. Hello. So what is it? Personal account. Personal account. Either it will be natural or artificial or representative. Debtor, human being, natural person. Debtor, corporate, artificial. Bills receivable, representative. So trade receivable means what? It can have debtor or bills receivable or both. So I don't know what it is. So I cannot classify personal, I cannot classify natural, artificial or representative. All I can classify for now is only personal. GST payable. Looking at the board, anybody can tell. GST payable. To whom are you going to pay? To whom are you going to pay? Income tax department. So when you pay the money, who will receive? Department. So it is artificial personal account. So GST payable is artificial personal account. Discount allowed. Loss. Loss. What account? Debit all expense and losses. Nominal account. Bad debt. Debit all expense and losses. Nominal account. Capital. Capital. Human being. In case of sole proprietorship business, human being. What is it? Natural personal account. Drawings. Money withdrawn by the owner. Who's withdrawing? Owner. Owner is natural personal account. Human being. Interest receivable. Receivable means I've not yet received. When will I receive? In future. Anything that I receive in future is asset. All assets are personal. All assets are personal. Real. Except bank. Debtor. Bills receivable. Accrued expenses. Prepaid expenses. Is this my accrued expenses? Sorry, accrued income? Yes. What does interest receivable means? Income earned, money not received. When will I receive? In future. So this is accrued income. So interest receivable is accrued income. So when I teach accrued income properly, that time you'll understand why this is personal. This is representative personal account. Prepaid expenses, outstanding expenses, accrued income, income received in advance, which is also called as unearned income. All these four are always representative personal account. So when I explain all the four properly, that time you'll understand why this is personal. Okay, not okay? Rent received in advance, unearned income, representative personal account, representative personal account. Prepaid, again representative personal account. Bad debt recovered, gain, trade all income and gain, nominal account. Depreciation, expenses, losses, nominal account. Personal income tax, drawing, personal account. So interest receivable, rent received in advance, prepaid and outstanding. These four will be discussed in the upcoming sessions. What is trade discount? What is cash discount? Upcoming sessions. Clear or not clear? Okay. So are you comfortable with the golden rule, modern rule to some extent? So next class onwards, we'll start doing the journal. So 2 classes on journal to discuss multiple points. And from there, ledger, trial balance, followed by GST. This is the target. By this month end, my target is to finish all this topic. That is basically including subsidiary book. That is, except rectification of error, my target is to complete all the other units under chapter 2. Rectification will not be done now. Rectification should be done after some 3-4 chapters are over. After I finish depreciation, bill of exchange, after that we'll do rectification. So my target for this month end is to complete the chapter 2 except rectification of error. Any doubts, please? Today is what? Friday, no? Okay, I'll schedule. We'll wind up. Okay. I want online people to stay back. I want to discuss something after the recording is being stopped. Offline people stay back. Otherwise, I can wind up the class in my own style. Fantastic. Sir? So that's all from my side for this session. I'll see you all on Monday, coming Monday, 11 a.m. sharp. 11, not 10, 11 o'clock we'll do. 11 a.m. sharp. Until then. Bye-bye. See you. Take care.
Thank you, sir.
Thank you. Don't go anywhere. Just stay.